Many thanks for making a date with me today on the Marketplace. Welcome back. The Western Region Coordinating Council, in collaboration with gold firm Arum Monaco, is holding a 3-day event to showcase Ghana's gold. The event, dubbed the Ghana Gold Expo 2020, is on the theme promoting zero mercury. It seeks to reinforce Ghana's commitment towards the Minamata Convention by identifying and adopting affordable and cleaner solutions to eliminate the use of mercury in artisanal and small-scale mining. The aim is to improve livelihoods and build sustainable communities. The Ghana Gold Expo is to further create synergies among stakeholders and build proper structures in gold mining. Natalia Kwanza has more.
A clarion call has been made to industry players, international, indigenous companies, and experts to prefer solutions to eradicate illegal mining activities, popularly known as galamsey, from Ghana. The call was highlighted by the Western Regional Minister, Dr. Kobna Oshreda Komensa, at the ongoing maiden edition of the Ghana Gold Expo in Takoradi. The minister underscored the need to trigger and propel the development of technologies and other innovative solutions to correct the menace caused by galamsey, whilst promoting responsible mining in the artisanal and small-scale mining industry.
Institutional disconnect has been identified as one of the main challenges in our fights against illicit mining activities and trade. As a region and as a country, we have had our share of the repercussions of illegal mining and indiscriminate use of harmful chemicals in mining operations. I therefore have no doubt that adopting the initiative for zero mercury, which is the theme of this expo, is a good move. Not only for us to reaffirm our dominance as a region, with the largest gold deposit in Ghana and as a country, which is among the 10 gold-producing countries in the world, but it's to also to demonstrate our commitment to sustaining the gold industry and the environment for our future generations.
Board Chairman of the Minerals Commission, Samson Boafo, assured the Minerals Commission will continue to work with all stakeholders to ensure the interest of Ghanaians.
A significant role in the economy of Ghana. The Western region where this expo is taking place is one of the major regions where gold has been mined for over a century and continues to produce gold to support the economy of Ghana. In 2018, Ghana beat South Africa, not football, but as the largest gold producer in Africa. This achievement has undoubtedly brought much more attention to Ghana and its gold mining practices. The Minerals Commission, which is mandated by law to regulate and manage the utilization of the mineral resources of Ghana, and also charged with the coordination and implementation of policies relating to mining, will continue to work with all stakeholders to formulate strategies that will enhance sustainable gold production in the interest of the good people of Ghana and all investors.
Researcher Mercury in Water Bodies, Christiana Oduma, who represented outcomes of a research conducted on river bodies, says their study reveals high level of mercury pollution at Dunkorfinso and Peposo in the Western region.
I think the levels of mercury in our soil is high, and it is above the WHO and then the world background level. Even in the upstream where no activity is going on, because of the transport of mercury in the soils that are so much contaminated, it has transported onto those areas. Therefore, I am of the view that Ghana should have remediation so that we will redeem the soils and then reclaim our soil bags. Mercury recycles in the environment from hundreds to thousands of years. It doesn't leave the environment easily until it is buried in the deep sea. Therefore, it will create a lot of health issues. One is brain, it affects the brain, it affects the kidney, it affects the heart, it affects our futures in a way, children and others, and then the guides and the posture. So I think it has a lot of consequences on our health, and we should try and do it.
In Athalia Kwanzaa, reporting for Joy Business.
Meanwhile, the Director General of the Ghana Standards Authority, Professor Alex Dodu, says the coronavirus crisis has resulted in many investors now turning away to other safer investment havens, especially to gold. Professor Alex Dodu was speaking to journalists at the sidelines of the Made in Ghana Gold Expo held in Takoradi on the readiness of the Ghana Standards Authority to check standards of gold.
Well, I mean, there are two things we needed to do as a country, which we have actually done at the moment. We have developed standards in line with international standards for the gold industry, basically specifying what pure gold is. If we say it's 99% pure, the standards we have in Ghana are the same overseas. As the Ghana Standards Authority, we have also established a laboratory to test those standards. So when you bring your gold to the Ghana Standards Authority and we test, it meets those requirements. Finally, we have been certifying gold. And we have done all these things because gold is money. Currently, if one looks at the coronavirus crisis, it has led to investors moving towards gold. And whereas in the past we have seen gold just as a metal, I believe Ghana is beginning to see gold now as a currency, as money. Indeed, the Bank of Ghana reckons that if we get all the funds that we could obtain from gold exports, the Ghanaian cedi, the Ghana cedi, will be strongly favorable compared to other currencies, and we can move on. So the GSA has ensured that now we have the standards. So far, we have certified only one company, Gold Coast Refinery, to be able to have purified gold. We have marked and stamped that gold. Historically, we have just exported raw gold. And when you export raw gold, it's melted, refined elsewhere, and it's mixed. So really, Ghana has never been on the international gold market, even though we are the world's, Africa's biggest producer of gold. And that is a cause for serious concern. It's in the way it's quite similar to our cocoa, but we've had quite a few companies processing cocoa. Now we are calling strongly that a great amount of the gold from Ghana should not be exported raw, but should be purified, because in the process the value increases from 3 to about 20 based on what you do to it. Finally and importantly, we are trying to have a gold industry.
Let's turn our attention once again to the deadly coronavirus and its impact on the economy, because government is likely to lose about half of its projected oil revenues for this year. That is, if crude oil prices continue to decline or hover around $30 a barrel for the rest of the year. But does this put pressure on government to quickly review the budget estimates before July this year? George Rafe has more.
In the 2020 budget, government projected to get a little over $1.5 billion at a benchmark price of $62.6 a barrel for its oil revenue. Now, due to the coronavirus, which has impacted on oil demand and the sudden price war between Saudi Arabia and Russia, prices are now hitting at about $30 a barrel. Investment banking giant Goldman Sachs has also projected that prices will hit $20 a barrel before the end of this year. Now, based on this development, government could lose about $750 million if things should stay this way to the end of this year. There are even warnings that the situation could even get worse because of how this development could affect corporate taxes and royalty payment for some of these oil marketing companies. This would impact negatively on projects that draw their funding from this oil revenue. Some analysts say the current happenings may make a strong case for government to review some of its estimates or revenue projections outlined in the 2020 budget or look for alternate sources of funding. But persons close to government believe that it is still early days yet to review these estimates or quickly introduce some new policy measures, arguing that they believe that the situation would normalize very soon and that any new policy response should be measured.
Well, so let's still stay on coronavirus and on international front. Trading in the U.S. shares was briefly suspended yesterday after sharp falls led to an automatic halt in the selling and buying of stocks. Once trading resumed, 3 major U.S. stock indexes went down over 6%. Meanwhile, South Africa's rand also plunged by almost 8% against the dollar, touching its weakest level on a closing basis since January 1980 as investors fled riskier assets. This, coupled with Brent crude tumbling more than 30% on Monday and said to be the largest drop in one day since the start of the Gulf War in 1991. Well, my colleague Philip Namfuri joins me in the studio to take a look at the extent to which this coronavirus is affecting the economy and what government should be doing to mitigate the impact on the economy. Well, somewhere along the line, we'll also bring in the head of Data Bank Research for some further analysis of the development on the stock market. Philip, you're welcome.
No, thank you very much.
So is it time for government to dip its hands into the stabilization fund, because that is what it was set up for? Okay, so
we're looking at our economy, and then I suppose by your submissions, we're looking at the Ghanaian economy and the impact on the drop in the global oil prices. And thinking about it, I think we pegged our listen around $62 from the report that you played. A lot is riding on the use of oil revenues through the annual budget funding amount, that's the ABFA, to sustain our economic growth and development. And if I'm sure, I don't want to go ahead of myself and say this is what is going to happen immediately. I'm sure in the coming days, weeks, we should see that's if the oil price is still below what it is. Other markets, I'm sure you're well aware, given your exposure to the oil industry in terms of your experiences, you realize that some can pump at lower prices and still turn a profit. We haven't really reached that stage where we can pump or we can produce output per barrel at a lower price as compared to other economies, Saudi Arabia, Russia, etc. So I think if all things being equal, this happens for a longer period of time, then we have to look at what we have accrued in the stabilization fund over time.
Longer period of time, like what? I mean, 3 months?
It will depend on the outcome of Saudi Arabia and Russia's position with regards to OPEC. It will depend on the impact also on the coronavirus in terms of oil demand. We are hearing today that there are fewer cases in Wuhan as we saw in previous days. China being the biggest demander, if I can say so, of oil and oil products. Would that be good news in terms of demand? But we should also know that at the same time, other countries are also experiencing the brunt of it. Just before I came on here, I was looking at Bloomberg has this table where they give us numbers of countries that have been affected, and those that are still those that are still implementing travel bans and stuff like that. So you see that the oil story comes from different prongs. We have the local demand, we have airlines also not flying again, so they're not going to be demanding. So you see that it's a mix,
kind of complex,
a multiplicity of issues. And sometimes it's very hard to sit down here and accurately say that at this time this is what's going to happen and stuff like that. So that's just one part of it. There are different strands.
No, as a country, we may be lucky at this time because we have not witnessed, any outbreak.
By God's grace.
For now, by God's grace, so to speak.
Yeah.
Now, do you think, or how do you think the government must position itself now to offset a potential outbreak?
I think for the health side, I'm not really a health expert, so I would defer to the health experts. But on the business side of things, I would say, as an economy that's mainly driven by commodity exports will be hit or are already being hit. There's some reprieve when it comes to the gold side because of investors turning to safer haven assets. But you can see that even though there was a plunge in the stock market yesterday, there's been a rebound again this morning. Investor sentiment changes rapidly. And we should just hope that this virus is brought under control, particularly for us as an economy. And at this time where we have so many ambitions in terms of implementation of policies, programs, etc., I think we need every little penny to flow into our kitchen.
So what lessons should we learn as a primary commodity producer? Should we rely on these commodities because they have many times become volatile?
I think we know the answers, but I think it's the execution and implementation that we struggle with over time. But if we put in the right measures, I think there will come a time where we'll stop telling this commodity dependence story and all that. So I think it's just a matter of implementing and executing right strategies to ensure that we move in from primary production to manufacturing. We're already very dominated or service-based, if I can call it that. So it's a matter of moving to the manufacturing and benefiting from that more than the primary side.
Now let's bring in at this point the head of research at Data Bank, Alex Boahene, to also make an input into the international stock market and how the local bourse is responding to the coronavirus scare. Good afternoon, Alex. Welcome to the marketplace.
Right. Good afternoon, Manuel.
All right. So, like you heard earlier, the U.S. stock market recorded some downturns yesterday. Actually, it's actually halted selling of selling of stocks. What do you think, as a stock market expert, things like this happening, how do they reflect in our local market? Why should we be worried about this?
Well, first of all, I think the coronavirus has become a global issue. It's not only an issue that affects the U.S. or the China in the stock market, especially in Asia, London, and America. As investors focus. Hello.
Hello, Alex.
Yeah, it is, Emmanuel, but I can hear my own voice.
All right, you go ahead. We can hear you now.
Okay. So it has become a global issue, and now the market attention is actually on the coronavirus rather than positive data. For instance, last saw positive job numbers coming from the EU, and typically see these factors being reflected in stock prices, and stock market going up. But at this time, it went down. Yeah, so that shows that, I mean, the market is mostly focused on the coronavirus rather than positive economic data that's coming out.
All right, so on our local bears here, we have some equities, international commodities or international equities also here. Now, with these downturn on the international market, are you witnessing some kind of, some effects on the local markets for which we should be worried?
Yes, sure. I mean, the market has seen so far this year, and the emergence of the coronavirus has also Western markets. Now, what we have observed here is that most investors are due to travel to Ghana for their due diligence process, the investment process. Most of them tend to call off their visits, and that is positive the market, because as you are aware, the market is mostly dominated by these foreign investors. So once they are fully paid, you should expect that demand of Ghanaian stock in particular will be low, and that possibly be lower affect the stock price on that.
So if I got you right, it means that the local bears is not actually being felt, heavily like what is happening on the international front. Unfortunately, we lost Alex Boahin. He's the head of Data Bank Research. Back to studio. Final words before we go on break.
Alex mentioned something that I found particularly interesting, and we've seen it happen on our local bears for some time. There's this theory in finance called the efficient market theory, or efficient market hypothesis. All it says is that investors react to information available in the market. You've seen that sometimes in Ghana, anytime there's news surrounding a particular company, you will expect a sell-off in that equity. It doesn't really happen. Okay. So some have argued that our market is not really deep enough and efficient enough. Efficient is the word in terms of selling off or buying anytime there's information regarding the company. Okay. So that's just by the way.
Doesn't it thrive on speculations as it is
as it is in other places where once there's information, there's a quick move in the market and then there's stuff like that. We don't see that much in Ghana. Okay. But as time goes on, I expect our market to develop. The GSC, SEC putting things in place to ensure that our market becomes more robust. Okay. We should see that going. But with the coronavirus, like I said, we're not health experts. All we can do is to wait and see how best governments, now the IMF said they'll put aside some funds, World Bank, central banks, finance ministries, everybody's coming together to ensure that there's some liquidity, some support in the system if this thing goes out of hand. So I think we should wait and see how things go. But that notwithstanding, the ripple effects are still happening, and we're doing our best to contain them.
Thank you very much, Philip. Now for you, still live on the marketplace. Let's take a quick break. We'll be right back after this. You're welcome back. Now, trade facilitation company Ghana Community Network Services, also known as GCNet, has rejected claims of not having a full end-to-end customs management system for entry points within the country. According to GCNet, the government should blame itself for engaging other vendors, even though the current system has deployed is a complete solution that aids clearing of goods and revenue generation. GCNet's reaction is coming at a time government has made a strong case to end the contract of current vendors, including the GCNet, and replace them with a new integrated customs management system, also known as Unipass. But Deputy General Manager of Technical at GCNet, Carl Saki, who spoke with Joy Business's Northern Akwa Hayford, said government's current posture is unfortunate.
First is the fact that government owns a stake in GCNet. If you look at government entities for which government has actually, I'm looking at, say, last year, where they consider GCNet to be an SOE, and you want to juxtapose us against the mining companies that government has a stake in, the banks, we're actually number 2. It's only one of the mining companies that comes before GCNet. So from that perspective, you suddenly start questioning, why would you look at a company that you recognize as a high-performing state-owned enterprise, you own 35% of, and you want to take such a decision? That's one. The second thing, the second reason why I personally don't agree with government's decision is that really, there's no technical basis for the arguments that have been made. I mean, we've had many different arguments, and I don't think that the arguments on its own carry any merit, because systems are living beings. If you actually have any real reasons for saying that I want to change the system, as opposed to just saying end-to-end system or this is our own system, those things are stuff that you can actually interrogate. And
government says that too many vendors around the port, and they just want one vendor to handle everything. In fact, we understand that even those doing CTN and all that will be made to go. So one single vendor. Question, is it that you don't have what it takes to do all these jobs at the port?
Okay, so, if government says too many vendors, GCNet did not engage the vendors.
We'll bring you a continuation of that interesting interview on Business Live. But for now, that's it for the marketplace. My name is Emmanuel Apuaji. We are free. For more businesses, log on to myjoyonline.com/business. Have a good afternoon.